Okay, I think we can start now, and we'll let others join as we go along. Thank you so much for joining, and welcome to this webinar. Today, we will discuss an exciting topic with you, the impact of instant payment systems. My name is Osam Razi, and I'm an associate director within the financial inclusion team at Innovations for Poverty Action. I manage IPA's research portfolio on measuring the impact of instant payments, and I shall be your host for today. As all of you here might agree, in the past couple of years, uh, the term digital public infrastructure or DPI has gained significant popularity. It is a broad term and has many branches, but one key component or enabler of DPI is instant payment systems. These systems are being deployed globally and are poised to change the landscape for financial services, especially in emerging markets. However, the key question for us and for a lot of you is that what is the real impact of these payment systems on individuals, businesses, financial sectors, and overall economies? We are excited that there is now some early research on this topic. The Toulouse School of Economics and IPA have recently collaborated on developing an evidence synthesis that compiles results from these research studies, which shall be the focus of our discussion today. For the rest of the hour, we will follow the following structure. We will first pass on the virtual screen to Hakan Ozilmaz to share some of the results highlighted in the evidence brief on the impact of instant payment systems. Hakan is a postdoctoral scholar at the Stanford Graduate School of Business and has led the development of this brief. We will then have a panel discussion with some outstanding individuals who have graciously given us the time to participate today and are involved with instant payment systems in different capacities. We will reserve the last 5 to 10 minutes for a Q&A session to engage with all of you. But for that, please feel free to add your questions in the Q&A section of the webinar, which you'll see at the bottom of your screens as we go along the webinar. The overall time for this webinar is 60 minutes, and hopefully this turns out to be a very productive session. So without further ado, I will pass it on to Hakan to share the screen and to share the presentation with us. Over to you, Hakan.
Thank you, Hussam. Are you able to see my slides?
Yes.
Perfect. Well, thanks again for the great introduction. I'm Hakan Özilmaz. I'm a postdoctoral scholar at Stanford University, and I'm also affiliated with Toulouse School of Economics. This will be a rather brief presentation. For that reason, I would like to take the questions at the very end. So please feel free to drop off your questions to the chat section, and we'll go over that at the end. All right, so I'll be presenting early evidence on the impact of instant payment systems on transforming modern economies. So as a starting point, I would like to define instant interoperable payment systems as a crucial part of digital public infrastructure. So what is digital public infrastructure? So we can think of it as the digital railroads that governments use to deliver economic opportunities and social services to their citizens. So instant interoperable payment systems is a core component of this infrastructure because it allows instantaneous transfer of digital money between individuals, businesses, and governments. In addition to being instantaneous, these systems are interoperable, meaning that even when individuals have different bank accounts or mobile service providers, they can seamlessly make transfers to one another. So while instant payment systems are a crucial component of the digital public infrastructure, providing digital identification and open data sharing could further support this digital public infrastructure. So why should we care about instant payment systems? Because, as I will discuss today, establishing a robust digital public infrastructure can help governments address some of the most pressing challenges that they face. So what are these challenges? First of all, financial resilience is low. So in the most recent survey, when we look at the question, how difficult would it be to come up with emergency money within 30 days? We see that around 32% of the survey participants say that it will be very difficult, and 13% said that it will be not possible at all. So we take this as clear evidence that many households struggle to cope with negative economic shocks. They simply aren't resilient enough to weather financial emergencies. So how can instant payment systems help? So they can help by providing an affordable and accessible means of transferring money, and they can improve cash flow and encourage savings. So another key challenge is limited financial inclusion. So the same Findex survey shows that only around 60% of respondents have a financial account. So this means that millions of people lack access to essential financial tools such as basic checking accounts, insurance, or borrowing instruments. And again, instant payment systems here can also make an impact. They can foster competition by reducing the entry barrier for non-bank financial service providers and help make financial services be more accessible and affordable. So finally, a critical challenge is for businesses, access to credit. So according to the latest enterprise survey, over 50% of small businesses in sub-Saharan Africa are either fully credit constrained or partially credit constrained. This lack of access to credit severely limits their ability to expand their businesses. And instant payment systems can offer a solution to this problem by creating verifiable digital transaction records. And these records will help reduce information asymmetries and help businesses signal their credit worthiness and enable them to expand their access to loans and other financial resources. And this in turn would support entrepreneurship and economic development. So part of our optimism with the instant interoperable payment systems is that its earlier forms have certainly helped address some of the challenges that we have discussed. So first of all, we know that mobile money has played a pivotal role in advancing financial inclusion. For instance, in sub-Saharan Africa, there are 11 countries where more people have mobile money accounts than bank accounts. And we know that previous research shows mobile money has increased financial resilience, and it has also increased savings by reducing transaction costs. So these achievements are significant, but mobile money still faces significant challenges. First, mobile money users often have limited access to broader financial ecosystem. And second, the lack of interoperability between mobile money providers means lower network effects, and it reduces value for users and limits competition among providers. And this is where instant interoperable payment system comes into play. They address these shortcomings by enabling interoperable real-time transactions across different providers and making them a compelling alternative to both cash and other digital payment options. So a key advantage of instant payment systems, I'm repeating myself again, is interoperability. So in principle, interoperability can enhance competition among providers and lead to substantial reductions in transaction fees. So do we see any evidence for this? So a recent research paper looks at how implementing platform-level interoperability influences mobile money fees. And they find that interoperability is associated with 20% reduction in on-network transaction fees and a larger 35% reduction in off-network fees. Another important point here is that mobile money fees typically exhibit tiered pricing, so where low-value transactions are priced differently and typically higher than higher-value transactions. So this research also shows that off-network fees for small-value transactions fell even further by more than 45%. So the evidence suggests that interoperability could indeed benefit consumers, and especially those who conduct low-value transactions. So this brings us to our main question. How can instant interoperable payment systems influence economic outcomes? So I will go through some of these mechanisms one by one. So in terms of financial inclusion, we can expect instant interoperable payment systems to lower transaction costs, both explicit and implicit, like convenience and time costs, and enhance access to a broad set of financial services. In terms of access to credit and economic growth, we can expect digital transaction records generated by these digital payment systems to help reduce information asymmetries and improve credit access. And this increase in access to credit can encourage investment and entrepreneurship and contribute to overall economic growth. So finally, in terms of competition and innovation, instant payment systems can close the convenience gap between large banks and smaller financial service providers and promote competition and innovation in the financial sector. So the critical question is, do instant payment systems deliver on their promise? So I will go through one by one different aspects of these markets and discuss how instant payments affected market outcomes. So we will start by looking at its effect on financial inclusion. So most of the evidence is concentrated to India's unified payment interface and Brazil's PIX, Brazil's instant payment system. So evidence from research on India's unified payment interface shows that users of instant payment systems are 3 times more likely to save in formal accounts without reducing their informal savings. And the users of UPI are also more likely to switch from cash to digital for bill payments and receiving wages, and they're further integrated into the formal financial system. So how? We see this through changes in their behavior. For example, we see that there's a significant increase in users purchasing insurance and investment products through digital channels. So additional evidence from Brazil's PIX shows that the number of users, PIX users, as the number of PIX users increases, so does the use of other traditional banking services. Overall, the evidence suggests that users of instant payment systems don't just simply conduct digital transfers and payments and leave it at that. Instead, they become more integrated into the broader financial ecosystem in multidimensional ways, including their savings, credit, and insurance behavior. So now let's look at its impact on access to credit. So do we see a positive impact of instant payment systems in terms of access to credit? So when we look at evidence from India's UPI, we see that households in districts with higher participants of UPI saw around 8% more income growth between 2018 and 2022. And through their increased ability to borrow, these households also saw a 2% increase in business ownership and higher business income. An interesting point here is increased borrowing didn't happen immediately, but rather over time. And this is consistent with the idea that digital payments help households build transaction histories. And again, these transaction histories can help them signal their credit worthiness and gain access to capital. My presentation is mostly focusing on the effect of instant payment systems, but a crucial component of this digital public infrastructure is also open banking initiatives. As I mentioned, this could substantially support the impact of instant payment systems. And in the case of India's UPI, we see that UPI actually expanded access to credit by allowing customers to share their financial transaction data with various providers. And one key finding is that credit markets expanded by 17%, with significant expansion towards the underbanked. And this highlights the potential for instant payment systems to reach previously underserved populations. So who provided these loans? The source of this growth was primarily fintech firms, although traditional banks also saw increases in both the value and volume of the loans issued. So overall, this evidence, the evidence clearly shows that instant payment systems combined with open banking initiatives create robust access to credit, and especially for underserved populations. So finally, I also want to spend some time on competition and innovation. And here, maybe I should start by mentioning a key challenge in the traditional banking sector. So banking systems often suffer from market concentration, which stifles innovation and competition. For instance, this lack of competition may turn into low deposit rates offered to consumers, which then reduces aggregate formal savings and credit supply. So evidence from Brazil's PIX shows that instant payment systems can challenge the dominance of large banks by reducing the entry barriers for other non-bank financial service providers. So one paper shows that in regions with higher PIX usage, deposits at small banks grew more relative to large banks. And this shift is largely attributed to PIX reducing the convenience gap between large and small banks. And in terms of innovation, evidence from India's UPI shows that instant payment systems can stimulate financial innovation. In particular, the evidence shows that UPI stimulated the development of new financial products and user-friendly features on mobile apps, and also improved payment functionalities. So I would like to conclude with some key policy insights. So while instant payment systems can act as a catalyst for financial inclusion, it is important to note that the benefits may not automatically be realized in all contexts. So the existing evidence focuses predominantly on India's UPI and Brazil's PIX, where baseline financial inclusion is relatively high. So we definitely need more research to determine if these effects would also be generated in environments with low financial inclusion. So another critical issue is to consider trade-offs associating with implementing instant payment systems. So note that these systems are fully interoperable, which means that mobile money providers will have lower incentives to extend critical mobile money infrastructure, such as the agent network or telecommunication infrastructure. So in particular, an important concern here is that implementing interoperability or instant payment systems early in a market can reduce these infrastructure investments for firm. And so exactly for that reason, policymakers can consider providing subsidies for rural agent networks, which the providers are more likely to cut their infrastructure spending, and also telecommunication infrastructure. And finally, policymakers should consider using complementary policies to instant payment systems. For instance, Brazil has mandated participation from financial institutions to really exploit the network effects. And additionally, both India and Brazil have implemented open banking initiatives, which amplify the positive effects of instant payment systems. So in conclusion, instant interoperable payment systems hold significant potential for addressing these critical challenges that we discussed, that governments face. But we should keep in mind that their successful deployment requires a rather nuanced approach that understands both the opportunities and challenges posed by the existing market conditions. So that's it on my end. Thank you all for being here again.
Thanks so much, Hakan. This is very interesting. And as you rightly mentioned, we need to do more research to understand what is happening in other markets, especially in more nascent markets with respect to financial inclusion and technology penetration. Um, yeah, so we're going to start with the panel discussion now and take perspectives from experts on instant payment systems um, based on these findings. As I mentioned, we have a great lineup of panelists with us today, and we're again very grateful to all of them for taking out their time to talk to us. I'll quickly introduce all the panelists, and then we'll go into rounds of questions. First, we have with us Dilwan Berish Abera. Dilwan Berish joined the Bill and Melinda Gates Foundation in 2014 and currently serves as a senior program officer in the Inclusive Financial Systems team, focusing on digital payments infrastructure, primarily in Africa. She has over 20 years of experience working on various international economic development projects globally. Born and raised in Ethiopia, she currently lives in Seattle, Washington. We have with us also Sabine Mensah, who has over 27 years of experience in financial inclusion, digital payments, and mobile money. Sabine is currently the Deputy Chief Executive Officer at African Nenda Foundation, leading policy advocacy and capacity building efforts across Africa. Previously, she managed UNCDF's Inclusive Digital Economy programs in West and Central Africa, advancing global digital infrastructure. She has also consulted in mobile money and directed remittance services for 15 years at Western Union in Africa, US, and Canada. We also have with us Dr. William Mungunguse. Dr. William holds a PhD in Information Communication Technology and has published several research papers in ICT, payment systems, technology, and e-commerce. He has been serving in various payment and ICT systems groups at the Bank of Tanzania for more than 16 years and is currently the manager, payment systems development and support at the central bank. And additionally, he is a member of various payment systems and security teams within the Bank of Tanzania. Going to the other side of the world, to Faisal Mahmood, who heads the digital public infrastructure team at Karandas, Pakistan, bringing over 23 years of experience in technology and banking. He specializes in the development of digital infrastructures with a core focus on instant payments ecosystems. As a key member of the team behind the conceptualization and deployment of RAST, Faisal is now dedicated to fostering its adoption and creating citizen-centric services around it. He is also playing a key role in advancing the Pakistan Digital Stack initiative with a focus on enabling automated payment solutions for everyday customer transactions. We have with us researchers, as I mentioned as well. Phil Rossler, who I work very closely with. Professor Rossler is a professor of government at William and Mary, where he also serves as the director of the Digital Inclusion and Governance Lab and the director of the Africa Research Center at William and Mary's Global Research Institute. His recent research focuses on the effects of digital technology revolution, particularly on strategies to reduce smartphone gender gap and the effects of instant payment systems with field experiments in Tanzania, Malawi, Uganda, Pakistan, and beyond. And finally, we have our presenter with us, Hakan Ozilmaz, who is a postdoctoral scholar at the Stanford Graduate School of Business. Hakan's research lies at the intersection of household finance and development economics. He employs experimental methods to investigate the underadoption of financial technologies and suboptimal financial decision-making among indebted and underbanked populations. So again, thank you so much to all of you for being with us today. And to start with questions, maybe taking a more global perspective, Dilwan Beresh, maybe I'll start with you. The Gates Foundation introduced the Level 1 principles for instant payment systems in 2019 and hypothesized certain impacts. We now have early evidence on a range of impacts that these payment systems have on users and markets. How do you think this evidence will influence the thinking behind implementation and support for instant payment systems by institutions such as the Gates Foundation?
Thank you so much, Hussam. And first of all, let me say thank you for inviting the Gates Foundation to be part of this panel. Very excited to be here and to also meet my other panelist colleagues here. Thank you for the question. Yes, I think as Hakan showed in his presentation, we see that there's a lot of positive impacts of IIPS on the economy, on individual lives, whether it's lowering transactions, increasing competition, innovation, access to credit, and so on and so forth. As you mentioned, the level one project principles is really the premises of that whole principles is exactly this, that the fact that we hypothesize that if you use a certain set of design principles when building these instant payment systems, that they can be done in such a way that they actually address or meet the needs of low income consumers. And this is both individuals and merchants, small businesses, as Hakan was saying. And so we strongly believed in that, and the evidence here also seems to show or support this hypothesis, which is great. And part of the benefit of this evidence base is that it allows, well, we're already convinced, but it also encourages other donors to also come in and support these payment systems, deployments of these payment systems. So the Gates Foundation has been supporting the build out or upgrading of these payment systems globally. And a couple of my colleagues here from Pakistan and Tanzania, we've worked with those countries. In addition, on the continent, as we speak, we're supporting about 10 other projects that are at different stages of the build out phase of these payment systems. And so we continue to support these projects. We believe it's important when it comes to economic growth, increasing financial resilience, and so forth. But there's also recognition that we can't do it all. I know Gates Foundation has, is able to support a lot of projects, but we understand, given the expenses of these payment systems and building them, we are very much always seeking co-funders and other donors to come in. And again, this evidence base really does help us in making the case to other donors. Thank you.
Thank you. No, absolutely. I have a bias, but I strongly believe in the impact of instant payment systems and how they have and will be changing the financial inclusion landscape in emerging markets. Sabine, just to get some early thoughts from you, also, Africa Ninda has done some great work mapping the instant payment systems landscape across Africa. And you released your latest report on the state of inclusive instant payment systems just a couple of weeks ago. Can you quickly lay out for us how the trends are in adoption and usage for instant payment systems are changing across the region?
Sure, I hope you can hear me well.
Yeah.
Okay, awesome. I think there are three areas I would like to, or three ways I would like to answer that question. One might be to look at what has changed in the landscape. And when we look at the landscape of instant payment systems in Africa, there is a clear momentum on what's happening on the continent. Currently, we've mapped 31 instant payment systems that are live as of June 2023. And 28 of these systems are the country level, and 3 are regional systems. Now, collectively, these 31 systems cover 26 countries in Africa. So they enable IPS functionality for 26 countries in Africa. The interesting point and why we see this momentum from a very optimistic view is that 37 other countries have communicated to us that they're working on their instant payment plan. Some are, short term in the next 18 to 24 months, others are medium term. So it is within grasp to think that in a couple of years, all countries in Africa will have instant payment capacity. So that's a great news, from a landscape perspective. Now, from a usage perspective, what we've seen so far, and when we mapped the data that we received, we see about 49 billion transactions for 2023. And this is really almost 47% growth versus 2022. So great growth, great traction. And collectively, these transactions turn into close to $1 trillion in value in terms of transaction. And if we look at the last 3 years, the growth in value has increased by 273%. So it's astonishing. And it's great to see this much traction in terms of usage of instant payment systems in Africa. I think the third lens that I want to bring, and the one that I'm most excited about, is that inclusivity of these instant payment system has also improved versus last year. I mean, for us, we see inclusivity as a spectrum, and in that spectrum, at the basic level, you have, you mimic what you can do with cash. So P2P, peer-to-peer or person-to-person transfer, you're able also to pay for goods or services, so P2B. But the progress level of inclusivity for us is where the systems are interoperable all to all. So mobile money, the bank account of mobile money, all to all, it's interoperable. The system also enable all licensed financial service providers at a country or regional level to be part of that system. So they have access, and they also have an equal opportunity input into the decisions that are taken by the scheme. And last but not least, the central bank or the financial regulator is a key enabler of inclusive governance into that scheme. So it's great to see that this year we have 4 additional countries that have progressed to, they have moved to progress inclusivity in Africa. So now we have 9 systems covering 13 countries at a progress level of inclusivity. So that is very, very encouraging for us. And when we look at the landscape, I remain very optimistic with the idea that very soon we'll have IPS in all countries. And what that would mean for us is the capability also to have seamless cross-border transaction at a Pan-African level, which will really help us reach the goals of the African continental free trade area, because you need payments for trade. But here's a bit of what we've found so far.
Excellent. And no, absolutely. The last point you mentioned about cross-border transactions or cross-border payment systems, and I think there's a question about that also. We still have to learn the impact of those systems, which are much more elaborate and have a wider impact on both sides of the of borders, essentially. And Faisal was involved in RAS integration with Buna recently. And just sort of moving to you, Faisal, Pakistan's financial inclusion landscape is interesting, almost unique, very close to my heart. The financial inclusion rate stands at 30%, slightly above the 21% reported by Findex. These are numbers we've taken from different sources. Findex reports 21% with no change between 2017 and 2021. But Karandas, where Faisal works, did a financial inclusion insight survey, which reports the financial inclusion rate 1 year later at 30%. So hopefully it's growing. There is a large informal sector of the economy that is not documented. There are effectively just 2 primary mobile money players. Some banks have a SIM banking or a mobile money product. But at the same time, you have had interoperability before through private switch, and now you have a state-of-the-art payment system. Do you expect RAS to significantly impact the rate of financial inclusion, which sort of is the first challenge for the country, and enable entry of new providers, as Hakan also shared during his presentation?
Right, Osam, thank you. So yes, you're right. Compared to most of the developing countries, the financial inclusion in Pakistan is relatively low. And the gender disparity does exist. As far as I remember, the gender gap is around 30%. Speaking of the 2 mobile money operators that you were referring to, they are Easy Paisa and JazzCash. There was a time when they really did increase the financial inclusion in the country. Because in a country of 250 million people, there are about only 17 to 18,000 bank branches. So they could technically not cover the entire country. And these branchless operators did play their role. But there was only so much they could do in the digital financial ecosystem that the country had before RAS. Now, RAS definitely, as I see, is going to be a game changer. RAST is developed on the level one principles that my colleague just mentioned a while ago. So this means that it has an open and interoperable infrastructure design. So other than open and operability, it also, some of the other features are the simplicity, security, lower zero cost, accessibility, and innovation in the payment. This actually significantly reduces the integration cost, enabling open banking. That is where fintechs can now enter into the financial market more easily. This fosters competition and allows smaller players to focus on customer experience and thus can tap into the underserved segments, such as the rural population, women, the less literate customers, and so on. When you were referring to uh, what kind of impact can RAST have, I think with the fintechs coming in, we will definitely see uh, a lot of impact. And the reason when I said that the financial inclusion has actually risen to 30%, we did a survey last year. And because of RAST, so RAST has about 45 million IDs, which is a unique ID. And other than that, the mobile money operators, one operator has about 15 million customers, the other has about 10 million, sorry, app users. The total accounts are approximately around 108 million. So I do understand some people do have multiple accounts, but generally it's around 30%, and it's increasing. The interesting bit is that these fintechs, the EMIs, they now have a larger chunk of the accounts compared to the digital banks or the other banks. So yes, it does help.
Wonderful. Yeah, we're closely monitoring RAST as well, and trying to see how the financial inclusion rate, especially in the next Findex or the next wave of FII, rises as a result. Going back to Africa, Dr. William, Tanzania has a completely different sort of a landscape from Pakistan in terms of, you have a very high account ownership in Tanzania, which is above 70%. And again, you have also a state-of-the-art payment system. What is the Bank of Tanzania's vision on how you take advantage of the rails of TIPS, and how will TIPS transform the financial inclusion landscape in Tanzania, particularly moving from adoption, which you have now, to usage of digital financial services?
Yeah, thank you, Hossam. Thank you. I appreciate being the part of this panel. Actually, in the case of Tanzania, after deployment of TIPS, we have been experienced a lot of advantage, and actually, we still envision that we have more advantage on TIPS compared to the previous ecosystem that we are running. At first, we see that TIPS can have a lot of impact in like 4 areas. The first one is in enabling affordable and accessible digital payments. With this one, we see that TIPS Beauty envisions that TIPS is like a gateway to transform financial inclusion by enabling reduced transaction costs and also simplifying the processes in making payments and also to make digital payment accessible to all, including the low income. Uh, since introduction of TIPS, we have also been experiencing a lot of reduction in fees, especially on those transactions which are little transactions which are directly uh, interoperable among the service providers. And also, we are still pushing to see more benefits on the area of transfer, like from banks to wallets, and also from banks to wallets. So we see that there's a lot of advantages in enabling this affordable digital payments. Apart from that, also we envision that TIPS can also increase digital financial inclusion by deploying of more use cases. As you understand that initially we had to start with just a movement from maybe like personal to personal and personal to business, but now we see that there are also the merchant payments through tips are also being very, very useful in increasing this financial inclusion. We found that the merchants and the consumers are adopting and also increased usage in the use of QR code payments and others. So this, we still see that also there is a loom of having more use cases to be developed in tips to support these digital initiatives. And apart from those, so we also see that seamless and inclusive user experience. Having tips in places, we see that most of the payment system provider, the banks, the telcos, they all designed a lot of more use cases leveraging the existence of tips. So we envision that there will be more and more use cases which are more user friendly, also to have standardized interfaces, all of those to leverage the existence of tips. And the last one is in the area of oversight of the transactions and also oversight of the systems which are interfaced with tips. So we see that now all the banks and non-banks, they work like they meet in the same switch, and all of them, it is easy for them to exchange information and also to exchange of data. So we have a lot, it collects a lot of data which can be used for oversight capability. And further, also we envision that tips can also add a lot of value in lowering cross-border payments, as my colleague Sabine was also saying that concerning to, it's like a platform, a foundation to go to have a pan-African payment system. So we see that a platform like tips having national switches in the countries will large contribute to this goal of having cross-border platform that can connect all the entire instant payments platforms from different countries. Yes.
Thank you so much. No, absolutely. You mentioned oversight, exchange of data, open data. These are, very exciting questions and exciting possibilities on how we move from instant payment systems to an advanced stage of, open banking or open finance, which again in Hakan's presentation we see has benefits in itself. Phil, moving to you, again, taking a more sort of global perspective now, you are involved in multiple research projects on measuring the impact of instant payment systems in India, Tanzania, Philippines, and Pakistan. Across these countries, how are you seeing instant payment system implementations changing the financial inclusion landscape and sort of giving more energy to the financial sector? And what are the key use cases that you think are being prioritized by implementers in these markets?
Great. Yeah, thank you, Hussam. And thanks to my fellow panelists. I've learned a lot from everyone so far. Yeah, and so here, working on IPA's interoperable payment system project, we are taking a global kind of comparative perspective, and that does help us kind of think about more fundamental changes. I'm going to kind of go back to something that Hakan focused on, and thinking about this fundamental change from payments in cash to digital payments, right? And that's really, one of the major changes we've seen both in India with UPI and Brazil and Pix, is that, you had a majority of transactions in cash. Before UPI, I mean, some 98% of transactions, retail transactions, payments for goods and services were in cash. Now, it's down to 60% or even less. We have to think about, like, why does that matter? And then thinking about why that matters, it's useful to think about, well, the costs, of cash. A consumer and I'm here in Tanzania, just down the street from Dr. William, a consumer in Tanzania might see cash as free, right? There are no transaction fees associated with cash. But in fact, cash is very expensive. In the case of Tanzania, one has to acquire the cash. And to do so, many use mobile money for person-to-person transfers. But when it comes to retail payments, they cash out. So that requires going to a mobile money agent, paying the fee for cash out, the time, and the cost. But beyond that, of course, the risk of loss and theft. And in research we've done, we find that 3 times as likely to lose cash savings than digital savings. For merchants and businesses, they have to handle and storage costs of cash. And then I think something that Hakan pointed to, citing some of these really promising early studies of UPI, is the opportunity costs that come from cash in terms of denied access to credit and formal insurance products, right? When you're operating in the cash world, banks, financial service providers do not have financial record of your reliability as a potential beneficiary, and so they're unable to offer you formal financial products. So what's amazing is, of course, we've had this in UPI in Brazil. We've had millions of people switching their payments from cash to digital, which, as Hakan has shown, has allowed them to have access to these financial products. So one big question is, well, how did that switch happen? And I think what we have to think about is payments are network goods. The payment technology you use is going to be informed and influenced by what people around you are using, right? So they're network goods. It's going to be influenced by social learning, what your merchants using, consumers. So one idea is that instant payment systems do help to provide a coordination device moving away from cash to digital. And I think that's some of the benefits we've seen of kind of a big bang push for digital payments, is it offers this new focal point. But one point of caution here is that India and Brazil, their instant payment systems were alive or launched right at during COVID, right? And so COVID-19 offered this other kind of urgent push to digital payments that they benefited from. For systems in Tanzania, Pakistan, they might face additional inertia overcoming these network problems in switching from cash to digital, that I think is worth focusing on, and of course, something that we are focusing quite a bit on.
Thanks, Phil. That sort of relates to one of the questions also in the chat on sort of what are the circumstances or design choices essentially that are used by switch operators or central banks that can really sort of transform or take advantage of instant payments implementations. And Nakan, this sort of brings me back to your presentation, just sort of following up on what Phil was saying. You mentioned that the impact of instant payment systems have to be there has to be a concerted effort, right? Especially when there is little sort of exogenous push that we saw in UPI or PIX. Can you talk about what kind of environments do we need to ensure the effectiveness of instant payment systems?
So I will actually mostly reiterate what Philip has said. So I think we should keep in mind that these are essentially network goods, and the value predominantly comes from the other users and merchants using these goods. So and then this creates the issue of coordination. If no one else is using these products, then nobody has incentives to adopt these digital payment methods. So in that sense, these exogenous pushes are crucial to derive adoption, either on the consumer side or the merchant side, and then this will hopefully feed back to the other side of the market or to the same side and drive overall adoption. So, and that's why I was trying to get at this level of financial inclusion in before the implementation of instant payment systems in both India and also Brazil. For example, in Brazil, financial inclusion rate was around 70% when PIX was implemented. And on top of that, the central bank has mandated participation of all financial institutions, and there was also the positive impact of COVID. So it was kind of like almost like a perfect environment for the adoption of these technologies. And also we see the same thing in India, that this was really like the implementation of instant payment systems was really a part of a long run effort in investing in digital public infrastructure. And for example, there was provision of digital IDs, which actually help with the onboarding and verification. We know that identification tends to be a hurdle in some of the emerging economies. And on the other side, there was a significant effort to increase financial inclusion. So the financial inclusion rate was almost 100% in India before the implementation of UPI. But I also don't want to give the signal that we need these perfect environments for these systems to work, because research also shows that, some of it I briefly mentioned, that still implementing interoperability can generate substantial benefits. These benefits that we were talking about in terms of like financial inclusion and access to credit and so on, and especially competition. So this one paper that looks at the African continent and the implementation of interoperability at the platform level and how it impacted the fees and competition, and we still see the positive impacts of interoperability on mobile money. So that is also subject to some caveats. I don't want to take any further time, but I just want to say that still implementing interoperability can generate most of these benefits that we see through the instant payment systems.
No, absolutely. This is a very important question indeed, on sort of, what is the right environment and what is the right governance model for implementing payment systems. Go ahead, Phil.
Well, just one quick point here is that both PIX and UPI zero-rated fees, right? UPI not initially, but eventually brought fees down to zero. And of course, that increases the accessibility of digital payments, use of instant payment systems, and we've clearly seen that in the case of UPI and PIX. But of course, there are trade-offs that come from zero-rating fees. Is that FSPs lose access to revenue, and how do they recoup that revenue? It's going to come from other value-added services like credit products, insurance products. But are we then driving up those prices? Also, Brunmeier et al., their study on interoperability mobile money, competition through interoperability has driven down prices, but it did come at the expense of their investment in their network, mobile towers, and financial inclusion. So optimal pricing on instant payment systems is critical to think how we balance access and revenue to maintain these financial services.
Yes, and sorry, I know we're almost out of time, and there's so much to discuss. There's so many questions I have for you, and so many interesting things to talk about. But quickly getting Faisal's perspective on the cost, on your last point, Phil. State bank mandated a zero pricing policy for some time during the pandemic on the private sector switch, and then made RAST free, essentially. Faisal, do you see repercussions of this from the financial sector in reducing investment in infrastructure, or are you seeing positive changes Um,
Right. This is a very interesting question, and we kind of have a lot of debate on this point. Should we charge an interchange fee, an MDR, or should it be free? Because just like Philip said, so I'm a banker. From my historical experience with the banks, cash is free for the consumer, right? I go to a branch, I write a check, I get cash. There's no fee on that. But cash has a lot of cost. The government has huge cost to print it. The banks have huge logistics cost, cash handling, cash management cost, and all this cost is already absorbed in the P&L of all the banks, right? Versus digital. Now, a normal consumer uh, has a habit of using cash only, and they think it is free. And when you go to the consumer and ask them that from now on it's better that you start moving towards digital side, and they said fine, we can do that, and then you say there's a certain fee that you have to pay, they said no, thank you very much, we are happy with the cash. That's the situation right now we are trying to handle. uh, this is a very interesting fact. Uh, During the COVID, before COVID, there was an interbank funds transfer switch available, which had a certain fee associated to it. And the central bank, actually, the State Bank of Pakistan, during COVID, they made it free. I was just looking at the stats. The graph actually, the moment they made it free, they mandated all the banks not to charge anything to the customer. The graph went up like this, right? And then after the COVID was over, that switch came back, and the banks came back to the central bank saying, "Oh, we are losing money. Uh, we need to make profit. We need to make money on it." And State Bank said, "Okay, fine. You can go and you can charge, start charging your customers." By that time, RAST was already introduced, the instant payment system. So the overall graph was going high. The moment that existing switch put money, their graph from here came was still something on a flat line. But the overall payments, the RAST actually jumped at that stage because it was free, because it was owned by the central government, the central bank. And the overall graph kept on going upwards. When we started at COVID, there were about 80,000 to 100,000 transactions of account to account transfers on a daily basis of the existing switch. Now, today, only RAST is doing about over 4 million transactions a day. So is the other switch. So, accumulatively, from that 80 to 90,000 transactions on a daily basis at the start of COVID, we are doing about 10 million transactions a day. So price does matter. Price hasn't, and the general consumers, they need to understand the impact of price. So it's kind of a catch-22, because the mobile money operators, they kind of make money on this, whereas the banks have so many other products. For them, it's just operations.
Yeah.
That's the difference. I know we are short of time. This is a very interesting topic, but yeah.
No, that's the ultimate question of how do you strike the balance. I think we are out of time now, but I'd just like to take one last thought from Dilwan Barish. We asked you to join at 6 a.m. your time, so you reserve the right for final words. I'm not going to ask you the question that we had talked about, but maybe if you've seen the discussion, any general thoughts, final thoughts from you on how we are progressing as a community towards instant payment systems and the need for research and identifying the right design principles. Yeah.
Thank you so much. This is, as you said, there's so much to talk about and not enough time really to cover. We barely scratched the surface on this topic. Very excited to be here, as I said, and to hear from my colleagues here, of course, as I mentioned, some of which we're already working with very actively, and to also hear the progress from Sabine from the SIPS report in Africa. Very exciting. We, just to share, have a very audacious goal, ambitious goal, just when it comes to Africa by itself, that we would like to see every country on the continent have an inclusive instant payment systems by 2030. And as Sabine mentioned, we can make it. It's audacious, but it's not impossible, given the progress that we're seeing on the continent, and very excited. A lot of questions about or discussions around cross-border payments, which is kind of the next level once you have these domestic systems in place, and so forth. So very excited to hear this question around pricing and balancing that price versus the needs of perhaps mobile money operators that are not necessarily banks and don't have all the different income streams is a question that we've heard many times over as we've worked with different project owners, central banks, and so forth. I have heard in some cases where the central bank has thought about subsidies, and I think somebody mentioned that even for a period of time until sort of network effects come in, volumes increase, and so forth. So lots of great discussions. Hakan, thank you also for the research, and IPA obviously for presenting this evidence base, because as I said, this is the kind of information we need to kind of corral donors to support these IIPSs, because it does lead to economic growth, financial resilience on the ground, real time for people, and improving people's livelihoods. So very excited to be part of this, and hope we continue the work. Thank you.
Thank you. And thank you so much, all of you, for joining. Dr. Williams, Sabine, I'm really sorry I couldn't get back to the second questions, but hopefully we can schedule another webinar soon. Faisal, Phil, and Hakan. And thanks so much. You see the screen over here of Lauren Perlick. She is the force behind organizing this webinar. And thank you, all of you, for attending as well.
Thanks for having us.
Thank you. Have a
Bye
nice
now.
day. Bye.
Bye.
Thanks, Sam.
Thank you.
Thank you all.
Thank
you,
you.
Sam.
Bye.